How to the one and only the SPACs attack. We got another jam-packed show for you. Not only one interview today, we're going to go after two companies today. So stay tuned on the one and only SPACs attack. You guys hit that like. Let's get this show started. How we doing, traders? Let's go ahead and get this started. Let's bring on the brains to this show. Chris Ketchy, what's going on, my friend?
Hey, what's going on, Mitch? Yeah, we're back. I see some people in the chat there. It looks like they missed us, but we are back in full swing today.
That we are. Like always, we'd like to get you guys the information in the SPAC industry, and that's what SPACs Attack is really all about, is having you guys be informed traders out there. So definitely hit the like. Let's get it started. Chris, I know we got some headlines to get to. We got interviews. I know you'll probably run through these, but let's go ahead and take us back to those headlines.
All right, guys. Yeah, we've got a full show today, so let's get into some headlines to start us out. The big news yesterday, SoFi Technologies, SOFI, getting an overweight rating and a price target of $25 from Morgan Stanley, who initiated coverage on the company. They said that the fintech space is rising with competition, but SoFi is leading with lending, specifically refinancing a high-yield student loan into a lower rate. Also said that the customer base can double in the next 2 years from 2.6 to 5.3 million, and also noting that the customer base doubled over the past year from 1.2 to 2.6 million. Also looked at some revenue drivers as well. So SoFi had a nice lift yesterday. Nice note here. Remember, for anyone new to the stream, we do have the bank charter as a possible catalyst coming before the end of the year. I am long SoFi, and I think this trend continues with this name. Another mover out there, we have Freyr, F-R-E-Y. This is a battery play, went public via SPAC. So the company announced a 50-50 joint venture with Koch Strategic Platforms to evaluate a U.S. gigafactory production of clean next-generation battery cells for energy storage systems, mobility, and electric vehicle applications. So again, Freyr Battery getting a nice lift there off of that news. Then we have Rocket Lab, RKLB. This is one that we talked about last week, had news. They announced that they are acquiring a Colorado-based space software company called Advanced Solutions for $40 million. So Advanced Solutions is flight software for spacecraft, guidance, navigation, and control offerings, and also mission simulation and test software. So Rocket Labs, their primary business, if you remember, is launches. So now they're building out this space systems division and diversifying themselves in the space industry. So I like this move here from them. So Rocket Labs, RKLB, continues to be one on watch here. Then we have BurgerFi. So BurgerFi is one that Mitch and I have talked about for a while, a restaurant play, a reopening play. Went public via SPAC, BFI. Company announced that it will acquire Anthony's Coal-Fired Pizza and Wings for $161 million. I'm not familiar with that brand, but BurgerFi acquiring this pizza and wing company, diversifying themselves in the restaurant space. So interesting play here. We'll circle back, on this one later on as we get more details, but looks like it will be accretive to earnings per share in 2022. Have to note that there was a comment made by Jim Cramer on Mad Money last night. His quote was, and I quote, "I'm not going to just sit here and recommend the SPACs anymore. It just hurts too many people, and people should stop filing them," unquote. We know by now that Kramer likes to flip on and off on SPACs, so no surprise here that he is now going against SPACs. I fully expect within a week or two he'll have an interview with a SPAC CEO on there or start talking about de-SPACed companies in a positive light. So no sweat here, Kramer's comments. Then we did get a deal announced this morning. This one was rumored last week. So Dune Acquisition Corp, DUNE, announcing a merger with TradeZero, a leading trading platform. Will trade as TRAD on the New York Stock Exchange, with Dune shareholders owning 24% of the new company. So the company right now offers a full-featured trading platform. They bill itself as built by active traders for active traders. TradeZero offers many features, including its patent-pending short locate services, which it says makes it easier to short a stock. So a range of monthly plans offered ranging from free to $59 a month. Median age of a TradeZero account holder is 33 years old, and they have 76% of their users from international territories. And international will continue to be a trend for the company. They've listed dates of 2022 for Canada, 2023 for Europe, 2024 for Latin America, and 2024 for Asia Pacific. They also list crypto trading as one of their growth initiatives. No surprise there in the retail brokerage world. They average $4,000 in revenue annually from new accounts. The average first-year account makes over 1,300 trades from their TradeZero account. So they have, right now, they see 21,000 accounts in this current year, up 62% annually. 2019 through 2023, revenue expected to be $85 million in fiscal 2021, and net income of $38 million. And then turning to calendar and some dates, we did get the deal closed between STWO, now trading as GWH. Those shares are skyrocketing today. They hit over $20. This is a Bill Gates-backed energy company, had 83% redemption, so GWH among the hottest shares today. And then we do have the deal vote today, LOKB, and redemption deadlines today for LEGO, HZAC, and VIH. And then we did get one merger vote date set, RTPY, November 2nd with Aurora. That's what I've got, Mitch. I know that was a lot to get through there. Again, that SoFi note, the big news yesterday, and then today, GWH, a big gainer. I don't even see it on the charts, though, but that thing is flying, GWH.
All right. The only thing I got to note in those headlines is get me one of those pizzas, Anthony Coal-Fired Pizzas. I actually know all about this brand.
I was going to ask you, do you know this brand? Because we don't have it in Michigan that I'm aware of. I've never heard of it.
If Chrisopedia doesn't know it, maybe Money Mitch does.
It must be a Colorado thing.
No, it actually is a Florida thing.
Oh, Florida. Okay.
Okay,
so we're a Southern brand. Okay.
Yeah, that's where you'll find a lot of this Anthony Coal-Fired pizzas and wings. So pretty much think of a high-end pizza and wing restaurant. That's the way I would refer to Anthony's, and a lot of like natural ingredients, trying to bring that into it. And of course, this is not your standard pizza. This is not a, Pizza Hut pizza. You're talking about a coal-fired pizza. It looks, nice and fancy, nice date night type of place. We'll see how this helps BFI, but definitely it's one that I miss, Chris. I used to like going to it. It has some good lunch specials. And
I will take your word for it. I like this acquisition by BurgerFi because I think it diversifies them a little bit, right? So now they're going to have burgers. They're going to have the pizza and wing side of things. And Mitch, the big thing for me with BurgerFi, right, is as they build those new stores, they build them based on the delivery trend, right, and the takeout trend. So those pizza and wing restaurants, as they look to expand to new states, I'm wondering if BurgerFi can use that to their advantage and build those stores out with delivery and takeout in mind. So maybe that can be a catalyst for them and for that restaurant.
And we'll see how that helps the company continue to push on the growth drivers. I can use a burger, I could use a pizza, but even better is I could use some information on the stock we have coming up next. One of the things that we've been talking about, and I mean, it's definitely a focus, is infrastructure, right, Chris? I mean, if you're not looking at the infrastructure bill and you haven't been worrying about that, I don't know what kind of cave you are in, but definitely it's on a lot of people's radars. We've already gotten to two of the companies in this area. We're going to bring you a third right here on SPAX Attack. I hope that you guys are here exactly for up next. We're going to get into EO charging. If you guys don't know what this company is about, you're just about to learn. So stay tuned. This is when SPAX Attack unlocks those SPACs.
All right, yeah, super excited about this one, Mitch. You just previewed it nice here. This is a charging infrastructure play. We love those here on SPAX Attack, the things behind the thing. Joining us on the show today, we have Charlie Jardine, the founder and CEO of EO Charging. Company is going public with First Reserve Sustainable Growth Corp, that ticker FRSG. Charlie, welcome to SPAX Attack.
Morning, guys. Thank you for having me.
Of course, we're excited to hear more about your great company here, and of course, charging infrastructure. That's something we've talked about a lot on the show. The shift to electric vehicles. Up first, one of the first questions we always like to do here on SPAX Attack is why the decision to go public via SPAC, and was a traditional IPO considered by your company?
Yeah, I mean, firstly, EO Charging focuses on transitioning vehicle fleets to electric. So we provide the infrastructure, turnkey solutions for van, truck, and bus operators. Of course, as you know, the market for EVs is growing super, super fast. We're based in Europe, but have got plans here for the US. And ultimately, it's moving quickly. EO needs to move quickly. Of course, we looked at a number of strategic options for the business, and actually going public was right up there. And with a SPAC, of course, you get speed to market. So that was our preferred choice. We get the right amount of capital into the company, allows us to build the global leader in charging electric vehicle fleets. And SPAC's a really good tool.
Awesome. You gave us some background there. So I know that your company has a goal of becoming the global leader in charging for electric vans, buses, and car fleets. Can you just give us some background, on the company and why that goal is important and how EO will accomplish that?
Yeah, I mean, we started the business in 2014, and we work with a bunch of fleets ranging from Amazon to DHL to Go Ahead, which is London's largest bus operator. Yesterday, we announced a 3-year deal with Tesco, the UK's largest food retailer. And what we do is we help these fleets by deploying charging infrastructure into their depots. We provide the hardware, the software, the installation, the grid connections, and then the ongoing support and maintenance. And of course, this infrastructure is now mission critical. If it doesn't work, these fleets can't deliver food, people, or parcels. And therefore, our proposition is, again, it's a technology-led service proposition, providing that one-stop shop to these fleet operators, ensuring their vehicles keep moving. So, the Amazon deal we announced in March last year. It's the largest van and truck electrification program in history. They've got a commitment to get to 100,000 EVs on fleet. We are the exclusive software and service partner for Europe. We've got about 3,500 charging stations for Amazon alone on the platform. Plans to get to 5,000 by the end of the year. And that deal alone has helped EO grow despite COVID. We were Europe's 27th fastest growing company last year, and it's really put us at the forefront of the European fleet marketplace. And so now we want to take the opportunity with FRSG to take what we've done in Europe and bring it to other places in the world, including the States.
Perfect. Yeah, I definitely want to dive into US expansion a little bit more later on. But first, talking Europe, so Benzinga's based here in Michigan in the US. We hear so much about electric vehicle growth in the US, but I want to jump to Europe. Europe's kind of been ahead of the US for years and years. So tell us why is Europe so much faster at electric vehicle adoption? And, how does that give EO such an advantage of, the experience in Europe before coming to the US?
Yeah, I mean, look, you got carrots and you've got sticks, and the government in Europe, it's been very pro sustainability, and of course, within that, vehicles play a big part. So, you look at the UK, we've got a ban on the sale of petrol diesel vehicles from 2030. You've got other countries within Europe with similar timeframes. So you've got a big stick there. You've also got carrots, which are actually the cost of running an electric vehicle fleet over a petrol diesel alternative is becoming comparable, and actually in some cases it's becoming more affordable. So from a fleet operator's point of view, there's things that you have to do. Typically in cities like London, you've got, again, really aggressive timeframes for removing petrol diesel vehicles off your fleet and having to go to alternatives like electric or hydrogen. But again, the economics are starting to stack. So I think again, Europe is leading, but the US is not far behind. And of course, the size of the opportunity here is really, really exciting.
I read that EO was ranked number 27 on FT 1000 list of Europe's fastest growing companies in 2021. So that was the highest position for any company in the region from the electric vehicle sector. Can you just talk a little bit about, this fast growth that EO is seeing in the region?
Yeah, I mean, I'm sure you've talked to other EV charging companies. We are focused on fleet. So we don't do public charging. We do home charging, but really when it's a return to home fleet opportunity. So fleet is our focus. And of course, when we first started, it was a niche. It's now probably the most exciting part of the market. It's going to be the most fast growing part of the market, not just in Europe, but here as well in America. And actually, EO's been dedicated to that from day one. And now, with the market growing super quickly, EO is poised to take advantage of that. So, I think, the Financial Times 27th fastest growing company in Europe was, a great award for us, but I guess a testament to the focus on fleet and also the business model that we've got.
Awesome. I want to talk about technology for a minute. There's a slide in the presentation talking about the EO software ecosystem. So right now we have the full stack software, the EO Cloud, and the next generation will be the EO FleetBot AI. Can you just talk a little bit about the technology that EO has and where it's headed in the future?
Yeah, I guess linked to one of my earlier comments, if I'm a fleet operator transitioning to electric, what is my biggest concern? So my biggest concern is, are my vehicles going to charge? Are they going to be ready by the morning so they can go and do their next shift? So, within the software, you've got a bunch of unique features. But importantly, above all of that intelligence, actually, our job is to reliably charge these fleets. So you've got, software that proactively monitors what's happening with my chargers. We've got integrations with vehicle telematics, so we can see both the vehicle data and the charging data in the same place. And as a fleet or site operator, I can see, are my vehicles plugged in? Are they charging? What's the state of charge of their battery? And fundamentally, are they going to be ready by tomorrow morning? And to support that, we've got service. So again, we've got 24/7, 365 support. So we proactively monitor the charging stations of these fleet operators. And if there is an issue, we can diagnose and fix the issue remotely. And if we can't fix it remotely, we dispatch an engineer to site within 90 minutes. So that is a service, but it's enabled through the software. So initially, again, reliability is the focal point. But to your question, next to reliability, the really exciting opportunity with EVs is the ability to reduce refueling cost. So put simply, energy is expensive at 5 p.m., but it's cheap at midnight. So if we can use the data we get from the chargers, the vehicle scheduling software, energy pricing, we can start to look at, how many miles of recharging do these vehicles need and by when. And if we can shift charging from a peak to an off-peak time, we can start to save the fleet operator meaningful amounts of money. So when we talk about where we're heading, there's a few things we're doing, but you mentioned, FleetBot AI, and of course that concept is around helping fleet operators reduce their refueling costs.
Awesome. Yeah, I'm sure these fleet operators would love to save more money, and help their own margins. So that's a nice additive here. You mentioned Amazon, you mentioned Tesco. Obviously your presentation, some of these big names jump off the page, right? I see Amazon, Arrival, DHL, Tesco, and Uber mentioned. So I want to circle back to Amazon. You mentioned this was, the largest deal announced. This is exclusive to the European market. Can you just tell us, a little bit more of how this came to be? Was there a testing stage with Amazon? And how was EO able to win a deal with such a large, well-known company in the space?
Yeah, I guess to talk more broadly about the typical process for winning a customer, it tends to start with a trial. So the fleet will try, a few companies, maybe in a single country, but maybe across a region. And in parallel to the trial, they often run a tender. So, tender might cover, again, a country or a region, or it might even be a global tender. And so, those two things tend to happen again in parallel. And with Amazon, we successfully did a trial, led to a tender. We were successful in the tender. And ultimately, one of the things also we love about fleets is it has to be a partnership. Our software is only as good as the integrations we have with our customers' operations. So, integrations with their telematics, their vehicle scheduling software, their driver app, energy pricing, all of those things are things that we can do, but it requires ultimately a partnership with the customer. So EO's ability to do that, EO's ambition for doing that, has played a really important part into a lot of our successes you see here on this page. But again, it's not just software, it's that one-stop shop, that ability to provide the customer with one go-to. That's really important for a number of reasons, most importantly when it goes wrong. So EO is fully incentivized to ensure these vehicles charge reliably. And we've got, again, that service proposition of being able to get an engineer to any Amazon depot within 90 minutes. That's really important to these fleet operators. And EO's built this proposition from the ground up specifically for fleets. And so when the Amazon deal became an opportunity, EO was perfectly poised to capture that.
Awesome. And then the next slide in the presentation here, we talk about, vans and buses. You mentioned that EO is working with one of the largest busing companies in England. Can you just share some information on electric buses? Again, it seems like Europe is so much further ahead than the US. Are these deals being won with, bus companies? Are they being won with municipalities? How does this work for the contracts for the buses?
Yeah, I mean, it typically depends on the region. For us, we're proactively targeting both the bus operators and then the vehicle OEMs. So, vehicle OEMs need infrastructure partners to be able to help them sell their vehicles. So we support a number of OEMs across the truck and bus space. And then in terms of the operators, of course, they are looking to win new routes. And part of the terms in London, places like London, is they've got to have EV as part of their bid. So we engage with these operators early. We support them in their bids. Of course, there's plenty of things for them to consider when going electric, one of which is the infrastructure. With buses, the infrastructure is typically high-powered DC charging. It's therefore very expensive. You often need a grid connection. And so EO works with these operators and holds their hand from day one through to supply of the equipment, installation, and then ongoing operations. So, yeah, we've seen some good success in the bus space. It's a relatively new vertical for us relative to vans and trucks, but yeah, what we've built for the likes of Amazon is actually becoming and is increasingly appealing to these operators. So yeah, it's a really exciting market for us, not just in the UK, but Europe and globally.
And then you mentioned briefly that there was a deal recently announced with Tesco. So that is to power the home delivery fleet of electric vans. For anyone in the U.S. who's not familiar with Tesco, I do know that this is one of the largest retailers over there. Give us, some information on Tesco. How does that compare maybe to a U.S. company, and why is this deal so important for EO?
Yeah, I mean, look, Tesco would be your kind of Walmart equivalent, I guess. UK's largest food retailer. I believe it's the third largest food retailer in the world. They clearly have a meaningful size fleet. They've got many aspirations regards reducing their carbon emissions, one of which is transportation. So yeah, they've got big plans. EO is really proud to have announced that deal yesterday and support them in deploying infrastructure in a number of their depots across the UK.
Awesome. Now it's time to get to something I'm sure a lot of our viewers want to know about. So US expansion, it's highlighted in the presentation as a future growth objective of EO. Can you break down the timeline for us and why US expansion is so important for EO?
Yeah, I mean, firstly, relative to the business plan, we see the US as upside. However, I'm sitting here in Seattle today and very excited about the opportunity for EO in the US. We've got some great customers in Europe. They have some of them have global operations, and we are focused on working with these partners in Europe, doing an excellent job. And our strategy has always been to try and follow the customer. So that is our plan. Follow the customer, and of course that means often new territories, and so that's what we'll do. The US presents upside to our plan, but clearly, as you can see on the slide, there is a massive tailwind toward infrastructure, EVs. It helped with the arrival of President Biden, and EO is again super interested in this market, and of course we'll be exploring how we attack it.
Just a broad question on US expansion. Is this something that EO, fully intends to do under your own power, or is there the opportunity for some M&A activity to expand geographically here?
Yeah, I mean, I think there's always opportunity for M&A. We haven't got any targets in sight for the US, but yeah, look, we're confident in our ability to build a business here, and have got a number of plans in place.
Did you say you were in Seattle? I think I know that there's some companies headquartered in Seattle, so I don't know. People out there may be starting to speculate. So I just want to know, Charlie, is there any relationship with Amazon outside of Europe leading into U.S. expansion, or is that something that maybe we'll get more color on in the future?
Our relationship with Amazon is European based.
Okay, perfect. Is there the opportunity to work with them in the U.S.?
I'm not sure at this point.
Okay, that's perfect. I have a question here about speed. So, we talk about these charging stations. Obviously EV adoption is, rapid, including from these fleet customers. How many of these charging stations can you currently produce and install, in a given quarter?
Yeah, I mean, look, we've made and sold over 50,000 charging stations so far across 35 countries. Of course, the business plan shows a significant increase in volume over the next 1 to 2 to 3 years. Currently, we produce our charging stations in the UK. We've got plans for moving production, some of, if not all of production, to other places in Europe or even Asia. So in terms of scaling production, we're not concerned about that. I guess one of the other points is a lot of what we do is level 2 AC charging. So 90 to 95% of chargers that we sell and install are level 2. There is an increasing proportion of charging stations being level 3. And of course, as you start to think about the types of fleets that are electrifying, vans is often level 2 charging, but trucks and buses, in more cases than not, are increasing level 3.
So I want to talk about financials here for a minute. So estimate of 2021 revenue of 33 million, 2022 101 million. So compounded annual growth 122%. Fiscal 2021 through 2024. You have a lot of moving parts here. You have, the current expansion in Europe. You have expansion in the US. You have existing customers. You have new customers. How are some of these models made? How much of this is going to be organic growth? How much of it is going to be US? And how much of it is from, existing customers versus new?
Yeah, I mean, I think a broader comment is one of the things we love about Fleet is you get to build strong relationships with your customers. These customers have typically outwardly said, clearly this is how big my fleet is. We've made a commitment, or at least the CEO's made a commitment to electrify our fleet by 2030, 2035, 2040. So the kind of transition plans they have. And most of the customers on this slide are customers of ours today. So 85% of our pipeline is actually built up from existing customers, most of whom we know quite clearly what their transition plan is. So again, that is one of the benefits of Fleet. It's clarity around business plan, projects, number of vehicles they're expecting to see on their fleet each year. And so again, when you look at our 1 year forward revenue potential, $250 million pipeline built up mostly from existing customers.
Awesome. Yeah. Thank you for that color. Charlie, the biggest question we're getting out there from the chat, you mentioned there are other players in the electric vehicle charging space. We've interviewed, several on the show before. Can you just talk a little bit about competition? So obviously the big differentiating factor is you're going after fleet versus some of these others, going after public charging, but maybe on the technology and other areas, how is EO different than some of these competitors, both in Europe and when US expansion happens?
Yeah, I mean, to your point, we're very fleet focused. That's what we do. So fleet to us means charging vans, trucks, and buses in the depot, but also cars and vans on the driveways of employees. Our proposition is designed for those segments. We don't do public charging. We're not installing charging stations in petrol fuel courts, not in public car parks. Fleet is what we do. And to that end, our proposition is it's a turnkey solution, one-stop shop for fleet operators. And we are wrapping up the software and the hardware that we make with third-party hardware. We're doing installation, we're doing the grid connection, we're doing the ongoing service and maintenance, and providing those fleets again with a one-stop shop solution, which at least in Europe is very unique. And then within the one-stop shop, what is most unique, which we're experiencing in initial conversations here, is the software and service component. Again, reliability is key, and these fleet operators need significant reliability for what is now mission critical infrastructure. So within the software, we talked earlier, but you've got integrations with fleet management, telematics, vehicle scheduling software. All of these things become increasingly important to a fleet operator who's got a meaningful number of EVs on fleet. So that's what we do, and that's all we do.
Perfect. We did have a question from Roy earlier in the chat, and I'm pretty sure you just answered it for us, Charlie. But the question was, is your main focus in depot charging? Any plans to expand to metropolitan city charging or highway route chargers? So I guess, is this a never say never for public charging, or just not in the current plans here?
Not in the current plan. If it's fleet, yes. If it's not, probably not.
Awesome. Well, that's going to do it for questions here, Charlie. We enjoyed this interview. Again, learning so much about the EV space, the charging space, and love having, someone from a European leading company on the show here. And we look forward to hearing more about U.S. expansion. So again, Charlie Jardine, the founder and CEO of EO Charging, going public with First Reserve Sustainable Growth Corp. That ticker FRSG. Charlie, thanks for taking time out of your busy schedule and joining us on SPAX Attack today.
Thanks, Chris. Thanks for having me.
Awesome. Another great interview here on SPAX Attack. EO Charging. Mitch, what do you think about that?
Super interesting. One of the things that I've been looking for is for more plays in infrastructure. I'm not looking at it as a 1-year thing. I'm looking at it as a next 5 to 10 years, the decade that we're moving into. As we know, we're definitely battling to get more and more of these charging stations. You need that first if you're really going to have this move into EV, because at the end of the day, even if, let's say, all the EV companies just manufactured all their cars and they just put it out there, what would happen? We can't even handle that right now, right?
Exactly.
The power walls would all come down. We would blow everything to smithereens right now. That's the truth. What do we need to do? We need to take it step A to B to C. I think step A is the infrastructure, the charging stations. Step B is getting autonomous correct. You'll see those LiDAR companies, those come into play. And step 3 is finally we get those EVs to really just smash, produce, and get towards the market, because everything will point towards it, and it will make it easier for the consumer to pick up EV when we have that autonomous. At least that's what I think. We'll see what happens. But let's go ahead. Let's get into our up next. We're going to get into an interview. What? We got another one for you?
A second interview. Surprise.
Get ready, guys. Get ready. I heard this company was having some fun this morning. Let's check out a little video I have before we go ahead and bring on Core. My internet wants to play here. Let's refresh it right quick. Hey, looks like we were ringing in the bell this morning. As we can see, look who's in the middle. I think that just might be who we might bring on right now. Let's go ahead and do that, Chris. I know that a lot of people have been listening to this company, and really, I mean, this was a company that I brought up early as I was myself looking into this company. Been looking for always 5G plays, how I can get into some plays, get it into the basket. Let's go ahead. Let's bring on the man himself, CEO of Core. How we doing?
All right. Yeah. Joining us on SPAX Attack, Romil Bahl, ringing the bell this morning. Right. So Core Wireless, KORE, the new ticker. Welcome back to SPAX Attack.
Well, thanks for having me back, guys. Chris and Mitch, it's good to see you.
It looks like you had some fun ringing that bell.
It's kind of hard not to be the kid in the candy store here at the New York Stock Exchange. The combination of, what is it now, 230 years of history and the legends that have come through here, the companies that have gone public, and to get to ring the bell, it was a bit of a kick.
Was it your first time?
First time on the New York Stock Exchange. Yes, I've done the NASDAQ before.
So you've done them both. Here's a guy who's done both major exchanges now. That's exciting. Yeah. Aside from, the fun video there of ringing the bell, the highlight for your career, what does the signal of being a publicly traded company now and completing the SPAC merger, what does that mean for Core Wireless?
Yeah, look, it's such a great question, right? Because, we're sort of stubbornly resolute about the next 10, 15 years being this fantastic time to being in the Internet of Things business, right? Because, as Mitch said, 5G will actually probably an order of magnitude more innovation than we saw even from 4G, right? And we don't even know. We haven't dreamt up the use cases that we at Core are going to enable. And the beauty of our business is we're pure play Internet of Things. It sort of doesn't matter to us what your end use case is. It could be from fleet management to pet tracking to remote patient monitoring, right? But we can provide the connectivity and the IoT managed services and the analytics services to help make your end-to-end solution go live. And so for us, being public signals this longer term, right? It's not about this quarter or even next year. It's about this 5, 10, 15-year inexorable push, 12 billion devices going to 75 billion connected devices in the world, and just going on hopefully a great run, for the whole team and for our shareholders.
Yeah, perfect. One of the things I know about Core is that your company has highly predictable and recurring revenue. We talk a lot about recurring revenue here on the show and other shows that Benzinga airs. Can you just talk to us, why is recurring revenue so important, and how does that guide the company going forward?
Yeah, so you guys know, and your audience knows why recurring revenue is important. It makes for such a predictable, again, a good public company characteristic, and that's one of the reasons why we came public. Several of us had public company experience on the team. We have stability, we have great revenue visibility, so it's just a good company to be public. And when you can take a bunch of your private equity debt down with the capital we raised, by the way, not $1 came off from this transaction. All our private equity shares converted to public shares, and all of us are along this ride. We're not treating this as an exit at all. But to get to your point, why do we have such high recurring revenue? It's because the nature of our business is very, very sticky. When we deploy devices, when we connect SIMs, if you will, for, again, whatever that use case might be, from dog collars to remote patient monitoring, cardiac rhythm monitoring, the cost of going in and changing that SIM card out is so high, it can range from $100 to $200 depending on the use case, that to try to change that out for 5 cent, 10 cent of ARPU, right, monthly price type difference, it's just never going to happen. And so pretty much once we deploy that device, we get revenue for the lifetime of that device. And so that's what makes us this very high recurring revenue business.
Awesome. So, one of the things we talk about, recurring revenue, we talk about customer bases, right? So over 3,600 enterprise customers, over 12 million devices across several industries for Core, compounded annual growth rate of 17% being seen for the next 5 years. So just talk to us a little bit about, how you're able to win these customer deals and also keep expanding to new customers.
Yeah, so it's one of the most interesting things about our business. We're not a very big business, right? Yet, right? And it's a very big customer list. And so I like to say 2 or 3 things about that. One is there's clearly a very long tail of very small customers in there, right? These are enterprises that are just starting to launch maybe a proof of concept prototype of an IoT, sort of a part of their digital transformation is to apply some IoT type technologies, or indeed a solution provider type enterprise who's providing a solution to their own end customers, whether it's B2B or B2C for them. They're just getting started. And when they get started, they usually, it's slow. You learn, you improve your value proposition, and then you start to grow, right? And again, back to being that pure play company, we enable you. And some of you are going to become absolute unicorns. Some will have just really good success, and we will just grow with all of you, right? And so that's our mantra. And so the 3,600 customers is actually part of why we feel so good about the foundation of the growth. Just the cross-sell opportunity to sell all the newer services. So when I got here 5 years ago, we were an IoT connectivity business, 4 years ago. Now we're connectivity solutions and analytics. We have so much more to sell to each of these customers. And so we're at the very front end of a massive, just existing customer focused growth story. And then, like you said, certainly we'll add some new customers as well as we go. And hopefully we'll add them, from the beginning, buying more of our propositions as opposed to starting with connectivity and then trying to sell you other pieces.
So a lot of viewers out there are probably familiar with, the terms 5G and Internet of Things, but to really quantify the market, Core listed a total addressable market for your company of 382 billion at the end of 2020, and that number is seen growing to $908 billion by the year 2025, almost $1 trillion. Can you just talk, this rapid adoption of 5G and Internet of Things, the overall market here?
Yeah, it's absolutely nuts. I mean, it's the tailwinds that we have that we can take advantage of as Core are fantastic. We have, in fact, it's funny, right? You're looking at the numbers of 2020 and 2025, and that's pretty good. That's a 18.9%. I think it is 19% CAGR on that chart. If you go forward on that chart from 2025 to 2030, when 5G truly matures and the impact is felt, it's actually closer to a 50% CAGR, right? You get closer to 7 trillion in the overall Internet of Things market. Now, in that market, connectivity is about 5%, and then applications and platforms is obviously a very big piece, and then IoT managed services is the rest. Let's say about a third of that business. And as we have expanded from connectivity to services, solutions, and some of the SaaS applications, et cetera, our sort of personal addressable market share off that overall market is going on this spectacular, 3 to 30 is how I like to say it, right? Like we addressed about 3% of that market 4 years ago. When we're done with our transformation, we'll be hitting 30% of that market. Now that's a bit of an exaggeration because it won't be 30% in China and every part of the world unless we are really set up there to provide all those services, right? But at least, it showcases the massive new revenue drivers and new capabilities that we are focused on.
One of the things of, now being publicly traded, completing that SPAC merger is we're going to get some analyst coverage. So I noticed that, Core has actually gotten a couple initiations recently. So we had Cohen and Company outperform and a price target of $18. We had Lightshed Partners initiating with a buy rating and a price target of 14. So I guess a couple questions here. First, will we see more analyst initiations? Do you have analysts that are still, working on their reports? And then also, what does this mean for validation for the company to get these strong ratings and price targets above where shares are trading?
Well, far above, as it turns out, as we are caught up in kind of this, sort of SPAC doldrums. We're not that classic kind of SPAC story that people get nervous about, right? We are a real revenue, real EBITDA type company. And so I think it's a matter of time. It's a matter of a few quarters of performing and telling our story, and we will build our way out of that. But it is nice to see, certainly the Cowen is the most recent one. Northland Capital, by the way, you did not mention, is the third of the three analysts that covers us, and I think they have a 17 price target as well. And so it is nice to see those three. There are a few others that are working on their models and their stories, and I suspect by the end of the year itself, maybe we'll have closer to a half dozen analysts covering us, or certainly sometime early next year, and then we'll just see from there. I don't know that there's an ideal number in my brain that have to be covering us, but you certainly would like to see 5, 6, 7 quality names.
Yeah, I don't know if there's an ideal number, but I think the ideal reports and price targets is, nice here from, and I'll have to find that Northland, initiation there. I don't think that's in our Benzinga Pro yet. So we'll get that note added as well.
Michael Lattimore is the analyst, very, very good analyst at Northland.
Perfect. Yeah, we will add that one for sure. You made a comment about not being, the typical company going public SPAC. So I want to talk a little bit about, profitability and near 60% gross margins. Just break down the financials of Core. Are you profitable? How are these gross margins so high? And, why should investors be looking at this company?
Yeah, so we have two lines of business, right? We have the IoT CAS, as we like to call it, connectivity as a service business, but think of that as connectivity. And then the IoT solutions business is where we have a lot of our managed services and SaaS tools and so forth, right? The newer businesses, which, by the way, were 0% of our revenue, 3 years ago. And we will end this year closer to, we think, closer to 30% of the business. We ended last year at about 26% of the business was these new the new capabilities, new service offerings. So in our classic connectivity business, that's where gross margins have been around 60% these last couple of years. Maybe it comes under a little bit of pressure, but at the same time, we're going to continue to get better with data science and optimization techniques to keep our gross margins there closer to 60. In the solutions area, it's actually much lower gross margins. It's in the high 30s, and that's because we're investing in it. They're newer, right? We don't have the scale and economies yet, and we're investing well ahead of revenue in terms of pre-configured solutions, et cetera. So I think that'll get better as well, and there's a chance. Now, what's really interesting in all of this is, in fact, today, right? We weren't just here for the bell and for the fun. We're actually running a 2-day board meeting here today and tomorrow at the New York Stock Exchange's meeting rooms to really use our time together and start the dialogue of where does the company go, right? We, under private equity, heavy debt, almost 10 turns of debt in total, you had to be a high EBITDA type company. Less of a focus on the top line. Well, as a public company, I think we can start to change that, right? You sort of want to target somewhere around 20/20 on the rule of 40 for a SaaS business, right? And so I think that's an evolving story over the coming weeks. We'll figure out, how much, hopefully, more investment we make. Maybe take the EBITDA margin profile down a little bit. It's been in the high 20s, mid 20s. Maybe even take that down towards 20 and start to focus on getting that top line, closer to 20 and more. So, stay tuned. More to come as we, as a board, sort of figure out how to charter the company forward.
Awesome. Yeah, I mean, we will definitely be following the progress of the company. That's going to do it for questions today. We had to have you back on because, you rang the bell. You're now official, right? Publicly traded. You got that great ticker, KORE, which is going to keep that brand awareness going. We love that. So for viewers out there, again, this is Romil Bahl, the CEO of Core Wireless. And as I said, that ticker KORE. Thank you so much for taking time out of your busy day and joining us live, from New York. So we look forward to following the progress of this great company.
Cheers, Chris. Thanks so much for having me.
Thank you. All right, guys, 2 interviews today. This was a fun one, right? EO Charging, European electric vehicle fleet charging specialist, and then also Core, ringing the bell at the New York Stock Exchange, 5G and Internet of Things. What do you think, Mitch?
Hold on. I got to unplug here. I was charging up here, just charging myself up here. And at the end of the day, I mean, what a day to talk about SPACs. We got into 2 stocks that you could definitely take a look at. If you didn't catch our earlier interview of Core, I would definitely go ahead and take a look. We definitely did more of a deep dive. We're kind of doing more of an update. So if you haven't seen that interview, definitely go check it out. Now, when it comes to EO, I mean, I think you will definitely be paying attention to how the charging infrastructure really starts taking off. One of the things that I'm looking forward to, and Chris, of course, this is going to come after the bill, is more along how does the push actually happen? Is there credits? What's going to happen? Are we going to see tax reductions? Are we going to see kind of a push for workers in that industry? Are we going to see kind of a subsidy or something that could kind of give them some more money to kind of pay for these employees that are going to be needed? Because it's going to be a massive change that's going to happen. And then the biggest thing, I think, is that the uncertainty actually gives us an opportunity for investment here.
Yeah, I mean, Mitch, these infrastructure bills, I think, are great, right? But, I think it, I know it. We got backing from Charlie on it. Europe is so far ahead of the U.S. I mean, I read these reports of like a country like Norway, right, where their electric vehicle market share is like 50%. Right. And in the U.S., we're far from that. And I think it's important, especially these fleet customers, especially buses, right? Your public transportation, your schools where they can save money. So I think we're going to get subsidies, right? I think there's going to be incentives to people to buy and use electric vehicles. I think you're going to see companies get, incentives to build factories in the US, to crank out more vehicles. So I'm looking forward to seeing, all of that. And then on the back end, right, the charging companies, they're needed, right? You said it earlier, Mitch, if we have, a ton of electric vehicles, we can't make it if they can't charge, right? They've got to be able to charge. So that's where a company like EO fits in. And Mitch, I didn't know this company prior to the SPAC deal. I like the fact that they've been a leader in Europe, and they're going to try to replicate that in the US, right? And there is some competition in the US, and Charlie didn't shy away from that. But I think what sets them apart, right, is that they're focused solely on fleet. They're not going to worry about public charging. They're not going to worry about at-home charging. They're just going to stay in their lane, the area that they do best, and do fleets. And the fact that they have an exclusive deal with Amazon in Europe, I mean, Amazon in the US, we've seen, Mitch, how many different EV companies have they partnered with in the US? A ton, right? To do vehicles, to do charging, but they've only partnered with EO in Europe for fleet management of charging. That's big. And then Tesco, I mean, you heard Charlie say, right? Tesco, I knew it was a big company, but him to say, it's essentially like our Walmart here in the US. So picture Walmart picking one company to manage all their fleet vehicles. That's what happened in Europe with EO. So, I mean, I can't underestimate the Amazon and the Tesco partnerships that they have in Europe.
Well, what was mentioned also in the presentation was what I saw as one of those operators that they worked with was Uber, right?
Yeah.
And so you're seeing also mentioned here by 2030 of going towards carbon neutral, right? And 100% fleet in Europe, Canada, and US fleet. Could that possibly be some kind of partnerships with some charging stations, right? Because you're going to need to offer those drivers some charging stations, and maybe even normal customers just don't have access to. It's just literally for the drivers of Uber so that they can continue getting their chargers, especially superchargers and things like that. They're going to need, because, I mean, let's say if you start getting down on your charge, you're not going to wait 2 hours to pick up the next customer. You're going to go ahead and use that supercharger to use it for 30 minutes and then be back on the road. So we'll see what happens with these. Amazon going from 10,000 in 8 years to 100,000. That's going to be massive. I mean, how are they going to charge all the, you know what I mean? And the real question is, since they already had relationship, Chris already kind of hinted to it. It's definitely present that potentially we could be hearing Amazon news come also from this company, not set in stone now, but I mean, Amazon, why wouldn't you, right? Why wouldn't you use something that you already tested?
Yeah, if it's working in Europe, why not, right?
Exactly.
Mitch, good call out on Uber. I also see Lyft there.
Mm-hmm.
And I know that one of the companies also listed on a slide was Arrival. Mitch, do you remember that Arrival has a deal with Lyft where they're working on building rideshare, vehicles? Connect the dots, guys. This is a company that's working with some of the leaders, and I think they're going to be able to land some more deals. So as they expand in the US, I expect some deals to be announced soon.
Yeah, one thing I think in the future you're going to start seeing more and more of is vehicles being able to just be rented. And with that being the case, if you're seeing these vehicles just all around, right, they're going to need these charging stations. We'll see what happens and how much of the market EVgo, ChargePoint, EO charging here, how much can they grab? It's going to be a battle. The one thing that I think is important is I don't really see one of them having the all-out advantage already. There's just not one that is just completely kicking it, taking already 60% of the market share, and we expect to see that continue. That's not the way it is. I think this is really going to be a battle, and you got to determine how do you come after it. I think a basket's the best approach, but it's always going to be up to you guys out there. All right, we're going to go ahead and start wrapping up here on the SPAX attack. I hope that you guys did us a favor and enjoyed the value that we gave back to you, and smash that like button down below. Looks like we had about 70 likes. Let's get it up there to 100. I want to keep going forward. Do EV drivers buy coal-fired pizza? Solar is asking. Solar up. You know what? Send me the bill. Go to Cold Fire Pizza.
I gotta try this pizza. Yeah, I'm
Yeah,
excited, Mitch. I gotta look up and see where the nearest location is.
I think Solar needs to take a trip to it, go find out what is all about that pizza and why Coal Fire Pizza is better than, you know, we won't call it, but like we've all seen those ovens in those pizza places where we're just like, whoa, those ovens definitely. I mean, I worked at those New York pizza places. So let's go ahead. Let's keep going, guys. XL Fleet also being mentioned. We'll definitely take a look. We'll keep watch on all these like we do in right here on Spacs Attack is uncover the SPACs. We'll keep going at it. If there's a SPAC that you guys, for any chance, don't have us already covering and you want us to go ahead and bring it on right here, hit us up in the comments afterwards and we'll do so for you out there. All right, Chris, anything else you want to leave off with? I know that we didn't get a chance really to get into our watch list out there. I don't know if you're seeing any stocks you want to go ahead and mention, maybe.
I saw Astra, ASTR, up like 13%. This is one that I said, sympathy play, right? We're seeing Rocket Lab and these space stocks get hot. We're seeing SpaceX, $100 billion valuation.
Mm-hmm.
Astra also has a launch window open for a deal with the U.S. Space Force, so keep that in mind. Shares are up 12% today, but there's another catalyst coming. Essentially, shares are up today because the flight window is open. But let's see when the flight actually takes place and it actually happens. Those are more catalysts coming for Astra here.
Yeah, and with that being said, what do you see? You see also ASTS also up. So pay attention to these. See if we get this continued move. I'll be paying attention to also see if we could get an SPCE run, because if that happens, we could pay attention to all these. We'll see what happens with the space industry. I'm also seeing Nikola on there, EFTR, DNA up on the day. We'll see what happens with these. Of course, there's definitely on a lot of people's radar, and we'll see what happens. I mean, looks like there's a couple other ones here. ZEV, one that I didn't expect. Lightning E Motors, definitely also in the fleet game. We'll see what happens with these and how they continue to make moves. Of course, keep your eyes on stocks like Clever and Maps. I think you just might be able to find them at the Cannabis Conference. If you guys don't know, we're going to have a Capital Cannabis Conference this Thursday and Friday. Yes, meet the top stocks in cannabis. And I mean, if you guys see this list and don't find us cannabis stock that you're interested and you're actually interested in this industry, let me know, because we'll get that cannabis stock on here. And like always, check it out, guys. This is going to be this Thursday and Friday, live in person. Yes, I said it. You could be in person, checking it out, walking around and getting it in person, or stay right here on Benzinga TV and catch it virtual.